Good afternoon and welcome to Bull Market Stock Show. This is your host, Adrian Orr, and I do apologize for starting a half an hour late. We just had some internet problems and also the load shedding that actually came in. But today's show is actually very important. That's why I couldn't skip it. One is the Australian dollar. Two, it is the New Zealand Canadian, and then also the South African rand. Now, the Australian dollar is at 0.75 against the US dollar. New Zealand is also doing well. Now, that comes from comments of this morning from the governor that was talking about inflation, and he's becoming actually very hawkish. We might see actually quite a lot of interest rates high coming to the end of this year and also next year. South Africa, on the other side, is sitting with some other problems, basically. One, I didn't expect South Africa has a shortage of truck drivers as well. At the beginning of this year, what I was reading on, we're sitting with about 3,000 shortages of truck drivers, and there's quite a critical skill. Not critical, but it is actually a very important skill, because these are the guys that actually transport our goods, and obviously you need to be driving on wet roads, dry roads, and all of these things that goes with. And there's a lot of South African drivers that actually move abroad to get better jobs. So that is actually quite a concern that's going on. And then on top of that, these currencies, Australia, New Zealand, Canada, and the South African rand, looks like these currencies can actually go as high as what we can't imagine. And that is all to do not just with the weak dollar, but this has to do with the interest rate hikes that is about to increase in these economies.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good afternoon and welcome back to Bull Market Stock Show. This is your host, Adrian Orr. So please don't forget to drop your comments. And also there's a link below of markets.com. Please click on the link and register your account, funded with $250. Get your classes absolutely free. Please, everything will stop on the 1st of November. So please fund that account, register the account, fund it, and then also just please let me know. And also there's a YouTube link. Please click on that, subscribe, and then you will get all my notifications. Now, I will start with South Africa. Today's podcast will be a bit long because I will start with South Africa. Then I will go to the Bank of Canada, which is very important. The interest rate decision is tomorrow. Then I will go to New Zealand and then also with the Australian dollar. But for all these currencies that I just mentioned, it looks actually very good and bullish, and it looks like a buy written all over them. With the South African rand, now, if you look at, for example, at our bond market, the bond market is actually on fire currently. And that has also to do with, this was an article of MoneyWeb that was yesterday on the 25th of October. They say research of inflation to push interest rates higher, bond market already priced in an interest rate hike. The question is, with how much? That is the whole thing. Because look, we can expect actually an interest rate hike of about a 0.25%. But if you look at the oil prices that are actually going up, it's quite aggressive, and there's a possibility that we might pay $20 by the end of this year. That is now just for filling up your tank. On the other side, we have electricity problems and coal prices that are increasing. So we might see actually a hike also with the electricity cost that goes up surely by next year, say I think about March or April. So all of these things combined is actually putting the prospect for inflation to be actually quite on the upward, and that could actually lead to quite aggressive interest rate hike when it comes to South Africa. And if you look at the South African rand, it's actually trading between, I would say, a rock and a hard place, I would say. This is the South African rand. Actually, I just want to put up. This is the South African rand, and if you look at it, it's actually trading now currently at 14.70. And for me, with the people of the United States not serious, or the Federal Reserve not serious about raising interest rates, for me, it looks like the rand can strengthen up because commodities are actually quite hot. Gold prices are actually on the rise. Oil prices are on the rise, and also you have gas prices that are also going up. So with all these things, and coal as well, so with all these things that are actually increasing, it looks like that will strengthen the rand and also the prospects of actually an interest rate hike at the end of this year, which is literally on the cards, and that could actually lead for the rand to strengthen. Now, obviously, the rand is an exotic currency, so it can jump all over the show. But I think the rand can increase, have a big jump by the end of this year, or actually as the year progresses to the end of the year. I think the rand will strengthening because it looks like everybody is pricing in a rate hike. Now, on the other one, it is the bond market. Look, the bond market is screaming inflation. This is the South African bond yields, and it is actually sitting now on 9.4, say 9.5 actually. This means this is actually saying that inflation is coming. And interest rate hike needs to come very soon. I think the South African Reserve Bank don't have much of a choice but to start actually to increase those interest rates, because things can get a bit ugly with the oil price going up, and it looks like it will go up quite aggressively. I will just take a short break, and then I'll be back with the Bank of Canada, which is very important, the New Zealand, and then also with the Australian dollar.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Good afternoon and welcome back to Bull Market Structure. This is Adrian Orr, and I did say today's podcast will be a bit longer because there's quite a lot of currencies that we need to do. I just did the rand. Now I'm doing Canadian dollar, which is tomorrow is the interest rate decision. And there's talks that the Canadians or the Bank of Canada might actually increase that interest rate tomorrow. Look, they were the first one who started with tapering. So they started to taper first by scaling down on their bond purchases. And as with this article, the Bank of Canada preview, when is the Bank of Canada look for interest rate hike? Now, the thing is that they will cut the bonds, and it looks like they might actually raise the interest rate. You must remember, Canada and oil are like best friends. So the oil prices go up. Normally, the economy of Canada is also improving because they are quite a heavy commodity-driven economy still. And then you have a very good job numbers. The last time, I think it was last month, no, beginning of this month, there was actually a very good job number also. On top of that, the Canadian job market is actually back to its pre-pandemic levels. So I think the Bank of Canada can afford to lift up the interest rates, because I don't know what is the whole story for them to wait. I think they must start to lift up the interest rates and get it over and done with, and cut down actually also on the bond purchases. This article that I was reading, it's actually a very good article, because I mean the economy is about to overheat and inflation is also going up because obviously oil price and gas prices, and it's winter, it's also increasing. So for the Bank of Canada to do the right decision is to start to raise the interest rates. That is now according to the article. So I think the Bank of Canada will become very hawkish, maybe not raise the interest rates, but actually will put out the warning signs that they will start to lift interest rates. And what will that do with the Canadian dollar? Now, I think the Canadian dollar can actually start to improve, not start to improve, it's already on a good run, but I think this can actually push it actually further down against the US dollar, because USD and CAD. I think the Canadian dollar can actually go further on. This is the 4-hour chart. I think actually it can actually go further on, go to this point here at 12 at 1.23. Once it breaks that, it goes where it was in June, where it can go to 1.0. Now, that is now if the Bank of Canada is becoming hawkish tomorrow, and which I think they will become hawkish, because one, the job numbers are back to pre-pandemic level. Oil prices are actually on the run. Gas prices are up. Lumber prices, you name it, all the commodities are up. So I think Canada has actually the prospects of lifting up the interest rates, because also you can just imagine when all the commodities are up, I think the job numbers of Canada for November will also be good. I will just take a short break, and then I'll be back with Australia and New Zealand, because this podcast is important for you so that you can actually place your trades. And it looks to me, these currencies will definitely go up even further.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Welcome back to Bull Market Stock Show. This is your host, Adrian Orr, and please don't forget to subscribe to my YouTube page. Register your account below on markets.com, fund with $250, and get your classes absolutely free. So please don't forget, markets.com, click on the link below and register your account, fund with $250, and get your classes absolutely free. Now, the Reserve Bank of New Zealand. Now, this morning, the Reserve Bank of New Zealand Governor Adrian Orr warns of a prolonged period of faster global inflation. Now, New Zealand did start to taper. And also on top of that, it looks like they will raise the interest rates. Because if you read the article was from Bloomberg. He actually said that inflation will be at 4% and then it can move over to 6%. That is now in 2022. He was talking about the global supply chain issues, and also it affects New Zealand quite drastically. So he was talking about raising interest rates in the next meeting, and New Zealand already started to raise interest rates, but it looks like New Zealand will become more actually aggressive. Now, these currencies that I just mentioned, South Africa, New Zealand, Canada, and then lastly I will mention Australia, they will, as things stand, it looks like they will actually move up against the US dollar. Because the US dollar or the US economy or Federal Reserve, these guys are not serious about tapering, nor it looks like they will raise up interest rates. And the economy is actually on fire in the United States. The same thing applies to Australia. Although Philip Lau, he's the Reserve Bank Governor of Australia, he's downplaying the whole story of raising the interest rates, because obviously they had a very long lockdown and people are now getting vaccinated and all of those things. But the issue is that you can have actually unemployment that goes up, and also inflation that can go up, because people are at home and people are basically spending. And that can become a problem because the economy can slow down. Although Philip Lau did talk about the housing market in Australia, that it is going to hurt the housing market in Australia if they raise the interest rates quite aggressively. But the thing is, I don't think they have much of a choice but to raise the interest rates, because one, the prices are actually going up, not just in Australia, across the world. And Australia, New Zealand, Canada economies that I just mentioned now, they don't have that large capacity of the United States and also of the European countries. So for Australia, New Zealand, Canada, and South Africa, these economies or reserve banks don't have much of a choice but to start raise interest rates quite aggressively, because the supply chain issues is a huge problem and the commodities are increasing drastically, which means there is pressure on these small economies, or I would say commodity-driven economies that I just mentioned, and that can also lead to job markets, which is good. But on the other side, it can also increase the spending capacity in our economies, and that could lead to drastic inflation. On top of that, for South Africa, there is actually a rumor, it's an article that I was also reading, that the South African government might actually spend a 60 billion rand stimulus package or job seeking package. So which means unemployed South Africans could actually get about 600 rand per month. Now that money will also go into the economy, and that could also raise inflation even further. So I think the Reserve Bank of South Africa don't have much of a choice but to push the interest rates, not just with 0.25, but maybe with the 0.5% or 0.75%. I don't know, but it looks like inflation can get out of hand for South Africa very quickly, as the bond market was screaming out. The bond market is actually screaming inflation. On my personal side, when it comes to the FX market, obviously I'm bullish on energy stocks, or energy, basically your natural gas, oil, because obviously it's a winter period, and normally in your winter period, that is where your oil price and gas prices actually move quite aggressively, and also your gold prices. And then I'm also in favor with the rand, Canadian dollar, New Zealand, and also the Australian dollar because of the winter period. And it looks like the winter will actually be worse in the northern hemisphere. So I would say I'm bullish on these currencies. I don't know about you, because I know it's a normal trend where it becomes to the end of the year, and that is where these currencies become bullish. So that is up to you. It's your choice. But if you want to trade, there's also an account at markets.com. You can register on, fund with $250, and then you will get your classes absolutely free. Also, please don't forget to subscribe to my YouTube page. And please just drop your comments also there as well, and then you will get also your notifications on my YouTube page. That is it from my side for today. I hope you guys enjoyed today's show, and then I will see you at 1 o'clock tomorrow. And I do apologize for starting a bit late today. Bye-bye.